Alright, we're going to speed run this market recap real fast. So, starting off, our savior oil. Going into the day, pretty much just pushes higher all up until about 6:30. The biggest thing with that move in general, and kind of what we had going into New York as well as PPI in general, when a lot of people were getting trapped with, for example, like these equal highs here, seeing something like that, institutional-wise, that alone, you basically have a rejection block up here. Body's coming right into this wick up here. You can see it on like a 5-minute as well. So having that is a really, really good indication that this may not be a failure swing that's actually intended to generate equal highs and, you know, run buy side and everything like that. Especially if you think about, again, market maker models, all of that good stuff. As you're on buy side of the curve, what are you looking to support price? And also, admittedly, this is pretty much more of a straight line, so it's a lot of buy side, sell side delivery, but we're not going to hindsight it like that. But when you have that shift in delivery, that alone you have to go with and use and play off of as your PD arrays. And as you're bearish, what do you want to see? FEG supporting, up close candles supporting price. Now, the market, of course, wants to, you know, run down lower. Think, for example, this one might be holding. That's fine. There's nothing wrong with that. But it's really crucial to be open to internal runs on liquidity, especially when you get pushes down like that, as well as you just reacting off this BISI in general. Whether you're going to have this BISI hold or not is up to you, with all these stack lows and everything underneath. But even if it wanted to hold, you would still then play the same rules, FEG, all that good stuff to hold, and everything like that. Or your backup, if you were long, first indication that something's probably happening, FEG on the retracement down. Also the fact that if you assume this is the push down, this really should have been the bullish breaker to hold. So you have the idea that these can be breakaway gaps, especially this one down here. Another sign, you also turtle soup this failure swing here. So if you're going to stop out highs, you're only doing that to go short, admittedly, and factually, in all honesty. So when you have those kind of signatures on your retracement, that's the last thing you want to be seen. And even this 3-minute breaker setup here trades back up into it on this wick here. And then up close candles supporting price, FEG slash SIBI supporting price, market pushes down. Same thing, FEG continues, breaks new low. Another FEG on retrace. Even if you tried to get caught here, the fact that you have an FEG on the retracement down after your current dealing range was already a push downwards, you want to be always reading price kind of left to right and going from what the current delivery is. And that will avoid you getting caught on stuff like this when really you're on sell side of the curve, but you're trying to take this long. Versus you actually want some kind of official closure in price and break before you actually want to start looking for like buy side delivery. And again, even this on oil, FEG continues, makes new low. These BISIs getting disrespected here. Also this one, if you got caught on this, sure. But same idea, you get an FEG on retracement, very unlikely. And that's not a good sign of something that you want to see in your trade regardless. You can just keep playing that logic, and this is also rejection block into the FEG. FEG again, SIBI gets a new low. And it's only at this point you get a break, and even then, you can apply the same logic of an internal sell side run or buy side run to keep going lower. And again, because you're getting FEGs and retracements and all that good stuff. Now, ES, I'll admit, with the idea of these highs not holding, and the fact that they did, as they were not broken, overall, yes, it probably will break eventually. But in the current time, which you can also look for, and something I'm kind of working on, is this internal run for the buy body to essentially fill this here is really what you're looking for. And then going after, again, you want to think about the timing of the day as well. If you're already up here at 9:30, could you keep going for 9:30, 10 o'clock to keep going? Yes, absolutely. However, if you think about the time and the idea behind AMD as an entire candle, if it's only 9:30 and the stock market just opens, you still have till 4 o'clock for the rest of the candle regardless, no matter what. So how likely are you to basically distribute the entire daily candle? Sometimes you can for trend days, of course, but based on just that timing aspect alone can save you a lot sometimes, especially for something like a straight up buy side delivery like this where it just completely shoots up. You get the sell side delivery through the same levels. Same thing on oil just mentioned. You get the buy side delivery and then you get paired with sell side delivery. And also hitting this order block here. That. So it's really one of those things where, especially with PPI having that news at 8:30 and going into that, you already have a cliff dive through London. Now, if you think about the timing aspect of this move down was through 5 to 7, so a lot more pre-New York versus something to see like 3 a.m., 3:30 a.m. New York or anything like that. Turtle soup failure swings, sweeping out more lows. The only reason you're going to sweep out lows is to go long. So you have that push up there on the news, and then that's just the Judas higher. The best indication that I had for the shorts at this morning was the small bodies. It's a very, very common concept you can use almost anywhere, actually really anywhere. If you're going to get small consecutive bodies, you know that it means all it really means is accumulation in some way, shape, or form. Not necessarily if it's going to reverse or do like a measured move, if somebody wants to refer to it, anything like that. But it can be one of those two things. So I was already inclined for it to be reversal just because of the launch pad that it did, as well as just the push up from the news release with really no discount retracement just to push up again. So by the time you're already up here, you really are actually overextended in that sense. So if you're getting small bodies like that, you can, the very minimum, look to run to this internal. And again, even if you didn't take the short all the way up here, you have the immediate rebalance here, this BISI getting disrespected here, as well as this brand new SIBI here. So even if you were bullish trying to long this, it gets sliced through, and then you get an FVG on retracement. Again, another clear sign that you can use to essentially as a red flag for your trade, or at least the idea that the delivery is probably shifting, because you don't want to see aggression on your retracements. You want to see nice, well-balanced moves down like this so it can just rifle through it. All these SIBIs here, for example, getting rebalanced immediately is balancing that entire range as it's moving through, allowing it to, once it's all balanced, run through it all. So if you already have an LR through this buy-side delivery here, you can expect LR through that exact same range. And again, you have that signal with the FEG, or the SIBI. So once it trades back up into it, you can look to go for a new low. And again, you have another in here, trades into it, you can proceed to make a new low. It looked a lot cleaner on NASDAQ today, admittedly, with the FEGs continuing and everything like that. I think it was more on the 5-minute. But same thing. NASDAQ, you get a breaker, trades up into it with an FEG, hits it, makes a new low, runs a failure swing, then makes a new low, just to fix this BISI. So it's one of those things where you get overextended markets you can really look for and anticipate moves. Not necessarily, doesn't always have to be to the external low, but very, very likely you can look for the internal run at the minimum and take the trade there for whatever it is. That was pretty much the only thing the market did, in all honesty. So really just sideways trading after that, running a couple pivots. As always, hope you guys enjoyed the video. Any other questions, or if you ever want to see me do reviews or recaps or just any ICT concept in general, by all means. It's really what do you guys want or what you're looking for, so be sure to comment that. I'll probably do a weekly outlook later this week. We do have an extended weekend with it being the holidays, so we'll try to get it out around that time and really analyze what to look for coming into each week, as well as what you can look for in terms of Power 3, weekly expansion, all that, at least what I do for my end.